A full-scale trade war between the United States and China is no longer hypothetical. It's unfolding. With tariffs exceeding 100% on Chinese imports, and China vowing to retaliate with tariffs of its own, the global economy is entering uncertain territory. Let's examine what this means, not just for these two powers, but for the rest of the world. In 2024, trade in goods between the US and China totaled around $585 billion, but the imbalance is clear. The US imported $440 billion worth of goods from China, while China imported only $145 billion from the US, leaving America with a $295 billion trade deficit. Despite years of tariffs, American reliance on Chinese imports remains significant, although it has declined from 21% of total imports in 2016 to 13% last year. In response to past tariffs, many Chinese exporters shifted operations to Southeast Asia, rerouting goods through countries like Malaysia, Vietnam, and Cambodia. To close this loophole, the US is now extending tariffs to imports from these countries as well. The result? A significant increase in costs for US consumers on goods like electronics, solar panels, and smartphones. The US exports soybeans, petroleum, and pharmaceuticals to China. China exports electronics, smartphones, toys, batteries, and other essential manufactured goods to the US. Smartphones alone account for 9% of US imports from China, many produced by US companies like Apple. The impact on firms like Apple has already been severe, with a 20% drop in its share price in the last month. Beyond tariffs, both countries are using strategic resources as leverage. China plays a dominant role in refining critical metals such as lithium, copper, and rare earths. It has already restricted exports of germanium and gallium, used in military technologies. In parallel, the US is escalating its technological blockade by restricting China's access to advanced microchips, vital for artificial intelligence and defense systems. Together, the US and China make up 43% of global GDP. An extended trade war would likely suppress growth in both economies, with spillover effects across the world. Countries dependent on trade, manufacturing, and global supply chains could experience slower growth, reduced investment, and rising costs. There's also the risk of product dumping, as Chinese companies seek alternative markets for excess production, potentially undermining industries in Europe, the UK, and elsewhere. A full-blown trade war between the US and China isn't just a bilateral issue, it's a global risk. From consumer prices and corporate profits to supply chains and strategic resources, the consequences will be widespread and in many cases, irreversible.